Good morning everyone, and welcome to the PivotBoss pre-market video for Wednesday, July 29th, 2020. I am Frank Ochoa, aka PivotBoss. Real quickly here, we do have the FOMC statement today and the Fed interest rate decision. We also have the FOMC press conference later on. That will be at the 1 o'clock Central Time or 2 o'clock p.m. Eastern Time. And basically we're going to get another one of these key levels like the FOMC key level from 610. That level right there is 31.96.5 and has been very, very important so far. You can see how initially we were looking for a move away from that level, and if it was down, then eventually we'd look for a strong low and then return back to that level. And then you can see once price pushed through it, it became support, which it has held above this entire time. And now we're going to get ourselves another FOMC key level later on this afternoon at 1 o'clock p.m. Central Time. Again, it's the 1 o'clock open price is the FOMC key level, and they've been very, very helpful here. So again, the way that we've developed up here at these highs, you can see right now we have a developing 4-day narrow range. We're right at the center of that 4-day narrow range, which means we could go all the way up to yesterday's high or all the way down to last week's low and still be narrow here at 58%. It would take expansion beyond that high or low in order to increase this thing. So the odds are pretty good here that we could finish the day with a very clear narrow range here to use for expansion in the days ahead. Typically speaking, the biggest day can tend to be the Thursday after the FOMC statement. For example, we saw directional conviction in the close where we closed lower. The next day, Thursday, was a huge down day. May not always be that case, but Thursday tends to be where the market has absorbed that information and is now ready to move. So again, we can get an early indication of that by the close today, but it's going to be this 4-day narrow range that could get us going. And given the overall uptrending price action here, a breakdown that fails would be a huge slingshot to new highs. The way this thing would fail would be a strong rejection at these highs first, and then perhaps seeing a huge bearish down day. That would take us back toward the 30.77 maybe into the 200-day, and then it could be another buy the dip opportunity here for a continuation higher. Whether that's back at the 200-day or whether it's down here at the key range low of 29.22, we'll have to see how the market absorbs this information. But right now, these are the key levels to watch: 32.31s and the overall 4-day narrow range that is currently developing. All right, let's take a look now at the NQ. Again, with Fed on deck here, we have very clear price action that has developed between the key range high and low. So here's the low right there. Here is the key range high. We got within 2 ticks of that high and then sold off back to the midpoint of that key range, and we've basically traded in the upper half of the key range. That's a bullish distribution there where price is mostly trending higher, and you would expect more uptrending price action here. One thing to keep in mind is we do have a strong rejection of these lows, a nice rally here. We've held support the last 2 days at the 10,500 level right there. That's very important here. But again, if that level gives out and we start to see some selling pressure, we could see a pretty significant stop run day ahead. What we've seen here over the last 6 to 7 trading sessions are very strong overnight highs that have come in, and by the end of the day we've traded much, much lower. The days after that can tend to be digestive or maybe pullback days, and so that might be today ahead of FOMC. But these have been 3 strong highs here. So right now, if price can't reestablish back above that pivot high, which is basically 10,760, then we could be looking at a retest of last week's low, because we never tested it, followed by perhaps a return back toward 10K on the deeper end here. So we have the key range low down here. If we were to drop that low, that could be a great opportunity to trap and reverse it back to the upside. So that's the framework we're working with right now, and at the moment, again, trading mostly inside day here with a strong top yesterday. Again, if we can't get back above that previous high, we could be working at new lows ahead. Let's take a look now at crude oil. Right now, crude oil is up about 0.7%. It remains within a very narrow range right here. There's a couple of good key ranges that can be made on an intraday basis here, and also this one here. And we have a very nice narrow range that's developed here over the last 6 to 7 days. So you count them back 1, 2, 3, 4, 5, 6, 7 days here, plus today would be 8 developing. So the 8-day range isn't set yet. But if we were to bring the PivotBoss advanced ADR indicator and set it to 8 days there, we'll get a quantification of this range. And what you'll see is a pretty compressed range compared to its average, but it's currently in line with what it's been. It's been 86.5%. But if you look at where we are compared to previous 8-day ranges, it's way off. So you look all the way back, these other 8-day ranges have been way higher. So right now we are compressed. It's just not really registering compared to average because we've seen lots of compression this month. But one thing to keep in mind is the fact that we have not been able to really find acceptance above the previous month's high suggests perhaps that we may be looking at a return back to the previous month's close, that blue dot right there. And that blue dot is going to be 39.82. And then there's always the potential to come back and grab the previous low as well. And that right there is 38.54. So right now, watching this key range very closely, you can see if we do break that key range to the downside, we start to work toward the 39.20s. All right, let's take a look now at gold futures. Again, gold has reached our 1957 target. I mentioned before that once we find a strong high, we're likely going to re-auction back through this thin portion of the profile right there. So at some point we will find a strong high. That does not mean to sell it. This thing is very strong. At some point when it does find a strong high, we will see a fairly quick rotation back down. It'll create a new LVN, and then we may see another quick return back to the high. So this thing is on fire right now. Big time move. Today's high currently 1977. Big time move. Now overall, I've added more additional upside key levels. 20, 21 would be the next upside target based off of this key range. So we've just reached the 1957.7 target. I've added another 25% to that range. That would be 2021s, and then beyond that you start to open it up even higher to 2084, which would basically be the 150% extension right there. So we have these two as the next upside targets, but again, at some point we'll find a strong high and then we'll auction back to these levels and perhaps build for the next move. So that's the approach right now, but at the moment very difficult to sell this one because it's been super bullish. So I'd keep an eye on it and continue to look to defend rotations until proven otherwise. Alright, that is it for now. We'll see how the Fed comes out later on this afternoon, and we'll get ourselves a new FOMC key level to use in both our analysis and trading moving forward. Alright, that does it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.